Let's start with top-line revenue growth. Where's it coming from? How much confidence do you have that we'll get more of that through 25?
Well, this was the big question, right, as we went through second quarter reporting, where, companies were putting up good bottom line numbers, but the top line was really disappointing on expectations. This kind of quarter, we've seen a bunch of solid activity. We've seen good incomes. We've been, encouraged by the fact that inflation has continued to slow. And I think we're going to see solid, but not blockbuster revenue growth in the third quarter. The real chance is going to be if we get into next year and some of the uncertainty is removed. I think people will feel more comfortable about increasing their activity. I mean by people, I mean both business decision makers and individuals.
One of the reasons why maybe didn't realize it was the second anniversary, and John didn't sound overly enthusiastic about it, although happy anniversary. I do think it hasn't felt this way. Right. It has not felt like a bull market. It has felt like a grind of lots of different narratives that are coming together with whipsaws in between, and a couple of behemoths that have absolutely led the charge while everything else had a soggy performance. When will it start to feel like a bull market?
Well, you're right. There's been a huge amount of discomfort in the leadership and the strength of that leadership, the persistence of the leadership. A message that we've talked about many times, and I feel like I have been a broken record, is to say the companies that have been leading the market are the strongest fundamentally. These are the companies putting up the cash flow. And I expect that will continue into 2025. How many times this year, by the way, have the uncomfortable, equity investors said it's time for rotation, it's time for rotation, the market's supposed to broaden out? Well, it's only going to broaden out if these top companies actually don't have the same growth trajectory that they've had over the last 2 years. And I don't think that's the case. I mean, I think parts of tech and the AI and the AI adjacent themes still have a lot of legs to go.
So given that, are you basically recommending that clients overweight stocks, even at the behest of bonds, at a time where the biggest uncertainty might not be in the stock market, but at this point really is in the bond market that's closed today for a celebration of the second anniversary of the bull market?
Yeah, that's correct. The bond market got the celebration correct. I would say this, we have been more neutral in terms of our fixed income allocation. I still think you're going to get the best juice from the equity market. But again, you have to pick your spots. The one thing that has happened throughout this past year that people have not always been comfortable with is that you have had to be tactical and you have to be on your feet. I don't think the kind of the set it and forget it strategy is going to be the way to go forward in the equity market. And so for this, I would say, I told you I love the tech and the AI and AI adjacent themes. I think there's opportunity more in the banks as we move forward. And I'm looking, if we continue to have stable growth indicators, for opportunities in some of the cyclicals. But there you have to be selective.